What I'm trying to, I'm partly trying to get you used to this balance sheet way of thinking, okay? But there is actually a conceptual point here too about the relationship between the government, state money, and private money and the banking system. It's a complex thing. We live in a hybrid system that is partly, where the central bank is partly a banker's bank, so it's a bank for other banks. In times of crisis, it's a government bank. It helps the government sell its bonds in war. It did this in World War I. It did this in World War II. It'll do it again. This is what it will do, and that's its job. It's not any kind of perversion of its job. That is its job. In normal times, it facilitates the operations of private capital markets, and it's moving back and forth between those over time. Here's another one of those instances where you can build monetary theory, okay, by imagining that really at the root of everything is the state that is printing money, and everything else is just a promise to that, and so it's really all about the state, okay? Or you can build a whole monetary theory by saying, really, it's all the private banking system, okay, and the government is making use of the private banking system to borrow or something like that, okay? So we start with the original, the gold standard, and people borrowing and making pledges. So you can build monetary theories that are pure private money, and you can build monetary theories that are pure state money. And neither of these is going to do you any good because the actual system is a hybrid. The actual system is a hybrid, and it moves back and forth. Sometimes it's more one, sometimes it's more the other. Here's another example where it's better to know two theories which claim to be opposites, okay, because both of them are true in some dimension, okay. Both of them are true about the part of the system they're talking about, okay, but not about the whole system. So again, I find myself, in between, not being willing, not being a chartalist, but neither being a medalist either, okay? But understanding both of those positions, the elasticity position and the discipline position, the monetarist position and the Keynesian position, okay? They both get at genuine features of the actual system. I find this balance sheet approach very helpful for letting us know when one approach makes sense and when we should be focusing on the other approach, because this is always true. The balance sheet approach is really just a relationship between debits and credits. So this will always work for you, whether you're talking about state money or whether you're talking about private money. You can use this same language. So it's a great bridging technique, and that's why I emphasize it in this course.